Hi, this is Professor Cataldo, and I'm going to cover the different forms of business entity. In an introductory financial accounting course, usually the focus is completely on C corporations. They're called C corporations because the rules are listed in subchapter C of the Internal Revenue Code. This is a summary for the sole proprietor or sole proprietorship, the partnership. Generally a general partnership, but it could be a limited partnership. The corporation, we focus on a subchapter C, but it could be an S corporation as well. In all cases, you see yes across the board for separate accounting entity. In all cases, these entities are separate accounting entities. It's the separate entity assumption. In the case of a sole proprietor, it's a single owner. In the case of a partnership, it's two or more partners. In the case of a corporation, it could be a single shareholder or as many shareholders as you like. The sole proprietorship is not taxed. That information is reported to the Internal Revenue Service on Schedule C, Form 1040, and it's reported on the taxpayer's Form 1040. A general partnership or a limited partnership is also not taxed. That is a pass-through entity. A subchapter C corporation is taxed, but a subchapter S corporation is a pass-through entity just like a partnership, and they are not taxed. A sole proprietor or proprietorship has unlimited liability. It's similar with a partnership. The general partners have joint and several liability. The C corporation or an S corporation liability is limited to the corporate assets. A sole proprietor or proprietorship is not a separate legal entity. The same with a partnership, general partnership or limited partnership. The general partners are at risk, joint and several liability. Corporation has, it is a separate legal entity, and so there's limited liability as previously mentioned. A sole proprietor or proprietorship has limited life. When the sole proprietor dies, that organization ceases to exist. The same with a general or limited partnership, although most partnership agreements have clauses that allow for the immediate formation of a new partnership upon the death of any partner in the partnership. And of course, a corporation has unlimited life. The tax forms used to report and compute taxable income from a sole proprietor is a Form 1040 Schedule C or Schedule F. The Schedule F is for farms or ranches. The partnership, general or limited partnership, is reported on a Form 1065, and the corporation for a C corporation is reported on a Form 1120. If it's an S corporation, it's a Form 1120S. You generally don't need this level of detail for an introductory financial accounting course. A broad overview will be fine. You'll get the details in your business law courses and in your tax courses. This is what a Form 1040 Schedule C looks like. This is how you report taxable income or compute it for a sole proprietorship. On the left-hand side, I have the form. You can go to the IRS website and find the form. It's a Schedule C. It says profit or loss from business. That's effectively an income statement or a statement of income. Now I've expanded the income or the revenue and expense portion so you can see what it looks like on the right-hand side. The Form 1065, keep in mind a partnership is a pass-through entity. You file a form, but you generally don't write a check or include it when you file the return. Instead, the partners get what's called a Form K1, and they go ahead and fill out the information on their distributive share of partnership profits and losses on their personal Form 1040. It usually enters their Form 1040 through something called a Schedule E. Once again, I have the entire form on the left. I have an expanded version of the income statement or statement of income component on the right. You're going to notice some of these line items are different between the Schedule C, the Form 1065, and the Form 1120. That is merely because the IRS is focusing on certain elements depending on the form of entity. And they're usually focusing on items that Congress wants them to focus on. This is the Form 1120. It's for a corporation which is a tax-paying entity. This is the focus usually of an introductory financial accounting course. I am not presenting the Form 1120S. That's for a pass-through entity. They're taxed a little differently. Once again, left-hand side, the entire form, right-hand side, an expanded version of the income statement or statement of income, or if you prefer, profit and loss component of page 1 of that Form 1120. Thank you.